What's up, guys? So today you might have seen, you probably have, that Redbox stock is up 80% in a single day, which means if you bought at the highs, you're only down 65%. So clearly it was a good investment. And that reminds me, I'm also selling this pile of trash here for 80% more than I was going to sell it to you for yesterday. So clearly you should have bought it yesterday because that was a good investment, right? So yeah, if you couldn't have guessed, my opinion on Redbox stock hasn't changed. It's still a trash stock. A lot of people forget that you can have a bad investment that goes up. That's not uncommon. It's really common, actually. Obviously, if I knew for sure that Redbox was going to go up 80% today, I would have bought some yesterday, or I guess not yesterday, but it would have been on Friday. The problem here is there's not a predictable way to forecast that type of stuff with these stocks. There are only three major ways to consistently make money, and those are passive investing, so that would be like index funds. Generally, if you buy an index fund of like the S&P 500 or something, you'll be able to, over a long enough time horizon, make money on it. The second is just long-term investing and valuing companies as actual businesses. This takes more effort than the first one, but it can lead to higher returns if you do it correctly. And then there's the inferior one, which a lot of people don't count as even a legitimate method of making money in the stock market, and that would be trading. So I'm actually being lenient for counting this one because it's kind of inferior to the first two. But there are people that trade based off of indicators. They look at like the RSI and formations and stuff, and they're able to like momentum trade and stuff like that. And if your investment strategy doesn't clearly fall into one of these three, that would mean it most likely falls into the BS category. And a few years ago, when I didn't know as much about investing, I used to make more plays like that where I didn't really know if I was trading. I was like, oh, okay, so there's this short-term thing, so that's a reason I should buy the stock, but also I like the stock long-term, which doesn't make any sense, because if you don't know which of these three categories you're trading or investing goes into, it really does fall into the BS category, because eventually you're going to start losing money if you don't have a plan. Like, why would you buy a stock and not have an idea of when you would sell the stock? If it's a short-term thing, you should sell it after whatever you expect it to happen happens. If it's a long-term investment and you just want to buy a piece of the company, and once it gets over a certain valuation or something like that, then you'll sell it. That's a plan as well. But if you don't know what your plan is, it's really more of just gambling, basically. And that's what most people are doing on Redbox. So when it goes up 80%, did you predict that? How are you able to tell that? Most people are just looking at Reddit. There's not like an indicator or a number or a price or something that they can look at and say, okay, this is a good price for Redbox. I want to buy Redbox stock at a market cap of $150 million because that would be fair based off of these metrics. And that would be kind of like a value investing, like individual stock type of investment. But they're also not saying like, okay, based on all these charts and stuff, I don't know how to do technical analysis, by the way, but like based off all these charts and like the RSI and all this momentum stuff, we should have a good pump to about $6 from like $5.80. So we'll just take that, and then if the numbers start to deteriorate, we'll sell out quickly or something like that. Nobody's doing any of that. There's no reason it went up 80% today. It just happened, and then everyone says, oh yay, it went up 80% and I bought in, so that's a good thing. But it's not predictable, and when you don't have an investment method that you can predict with a reasonable degree of certainty over your time horizon that you're working with of what's going to happen to a stock, it's just a bunch of guessing, which would fall into the gambling category, in my opinion. So that's really the problem, and that's why I don't care if it went up 80%. You'll probably say I'm coping. and I missed the short squeeze or whatever. But really, I don't care too much. Like I said, if I knew it was going to go up 80% today, I would have bought in. But there's no way to tell. That's the problem. And no one else that bought the stock could tell that it was going to go up 80% today or anything like that. It's just randomness. It's just gambling. So unless you're actually trading it based off of numbers and indicators and like advanced technical analysis and stuff, which I almost guarantee you're not doing. Just because you're buying and selling stocks on a short time frame and you're making money doesn't mean you're a good trader. It just means you have a short time horizon and you got lucky. So if you want to increase your odds of making money long term, I would suggest that you pick one of these three strategies, either passive investing with like index funds or something like that, valuing companies as a business, or the inferior one, which is trading based off of actual numbers and knowledge and stuff that's kind of beyond me, and that would be fine. But just make sure you pick one of them. I wouldn't even suggest doing two unless you count one as the passive investing. You could do that in like trading, or like do passive investing and some individual stock picking on the side or something like that. But it's very difficult to be good at all of these. And if you were good at one, it would be a lot smarter, in my opinion, to just put more effort into one, because you don't need to be good at everything. Just you need to have a circle of competence and stay within it. That it doesn't have to be a big one. There's no upside to really just expanding it randomly and just having like an enormous circle of competence to get like the same returns you could have got if you just like had a small circle of competence. But essentially my point is you should pick one and actually follow a strategy, not just guess random things. You should know the reasons that it's going to make you money, not just luck and nonsense. And they can't just be lame reasons like, I read a post on Reddit that said there's going to be a short squeeze. It's 45% shorted. The management said they're going to do this cool thing. So therefore, that'll definitely happen, because the management, they never lie. They have no incentive to. It's the management. Why would they? This random guy on Wall Street Bets, he knows what he's talking about on here. Why would he write some random crap on there for clout? I bet he knows exactly what he's doing. This is an investment guru. The best investors in the world have like a 20% annual gain over like 50 years. You know what? I bet this guy on Reddit, he's going to get me like a 500% gain in the next week on Redbox stock. That's how all the big investors did it. Just imagine if some big investor said that the reason they were successful was because they read posts on Reddit about short squeezes or some crap like that. You have to think of things critically like this. Just say it in your mind as if you had like massive success in investments and you were telling other people how to invest based off of that. Would it make any sense for you to be successful by reading Reddit posts for like 15 minutes and buying a stock based off of that? That would be insane. That would be ridiculous. That's not a real investment strategy. If you look on YouTube, you can find tons of talks from like universities and stuff about like real investment strategies. They're like hours long. You can just watch the whole thing from like Harvard and stuff if you actually want to learn about investing. I would recommend doing that. Just pick your favorite strategy. There's no wrong one out of those except trading, and then just learn how to actually do it. You can be lazy and pick the safe choice, which is not a bad choice. That could be definitely the best one for most people, by just passively investing. Or you could actually take time and learn how to value a business. So I don't care if it went up 80%. Feel free to dislike this video and say that I'm coping in the comments, but I'm really not. My thought process has not changed, because even if it went up 80% today, it's eventually going to go down. It just turns into a pump and dump where everyone buys in and then sells out, and there's nothing really happening. It's just a bunch of transferring of money to random people that don't know what they're doing from other random people that don't know what they're doing. But if you like this video and you want to learn more about valuing companies and stuff like that, I'll probably have some more videos on it soon. So subscribe to the channel, and thank you for watching.